Welcome to the end of day review for Tuesday, the 27th of February. Starting off with the economic calendar, there were some red folder news events in the New York session, both of which were negative for the USD and supported longs of the GBPUSD pair. However, the issue with this was that our overall narrative, if you recall from the outlooks, was to short. And this essentially prevented us from doing that. So having said that, let's just jump into the charts and unpack what had happened from the day. From a daily perspective, we knew that we had multiple consecutive bullish candles, and we anticipated that the day would close bearish, and it did do so, although not as enthusiastically as one would hope. Moving on to the 4-hour, from a 4-hour perspective, as you know, we are in a confirmed bearish structure, and that essentially means that the pro-trend move is to trade to the downside. However, there were some intricacies to understand. Essentially, last week Friday, we validated that the pullback phase primary leg is extended deeper into this pro-trend 4H extreme OB, which is this gray block right here. However, what we can then see is that this body break came subsequent to the initial wick of this last deepest point of reaction, and thus this pullback phase last point of supply reaction right here is not considered a valid reaction in terms of trying to trade longs counter trend with the objective of targeting this high. So having said all of that, our idea for the day was that we'd actually continue based on this this pro-trend primary leg that was in development on the 5-minute. However, what we can also see is that a couple of days passed since this leg was created, essentially resulting in us being in a range, which meant that previous high of the day, low of the day base rates were invalid, and all we can really do is focus on the current day price action to then tell us which direction to trade in. Having said all of that, the core idea is to short, with this pullback phase last point of supply not really posing a barrier because of the pro-trend move being to trade through the downside. However, it is an area that can provide opportunity to trade to the upside. However, I'm getting ahead of myself, as what actually happened over the course of the day was that we did push to the downside, but then subsequently pushed to the upside, and that was purely because of the positive the negative USD news supporting long GBPUSD rather than short. If we move to the 5-minute, we can unpack this further, and what we can see is that the Asia high of the day was taken, and this was good for us because it meant that we had Asia low liquidity to target and just made shorts more high probability. However, what then happened is that London put in the high of the day, and with no London red folder news giving us the opportunity to validate where this high of the day will hold, London actually took out the Asia liquidity. However, there was still previous day Asia liquidities below that were unliquidated, as you can see here, which enabled aggressiveness in our entries. However, we still needed to validate the London high of the day, and that was validated in New York by this week right here. However, again, we're sitting in this situation where at 3:30 the news was negative, so New York session supports long trades only, and then we were essentially hoping that CB consumer confidence would be somewhat neutral or at least positive, to then suggest that the New York session overall news release is mixed, and because the New York session would have taken out the London low, it would mean that the high of the day is likely to hold, and we could maybe target the day 1 or day 2 liquidity, and perhaps even leave this trade open on the assumption that it's close enough to the high of the week. But that didn't materialize, and we got more negative USD news, which explains this upward trajectory move. And that essentially brings us to the end of day review. Just to summarize, no trades were taken, and as you can see, the rule set that I have in place adequately protected me from any unnecessary losses or any trades that were not going to actually follow through.